Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's update our view on the gold market. So you can see the performance here significantly slower than on the euro currency. On the euro we see more aggressive upward performance. At the same time on the gold market we can't say that the short-term intraday bullish background, bullish context has failed. Yes, the overall reaction stands not as good as we would like to see it, but at the same time it's not failed and actually is still valid. And from that standpoint, the entry points that we have discussed in the weekly report both worked nice, and now if you have taken the position you should get more or less positive result and you could make the decision what to do next. Still, indeed, some bearish signs on the performance exist. So first of all, on the daily chart we do not have something really new. Engulfing pattern still stands valid. Market after some pullbacks, well, growing but very slow. Trend remains bullish. So on the 4-hour time frame chart we still keep our butterfly shape, although well currently maybe it's not as important, but for some case I just hold on the chart. And as we said previously, that if market even will complete some kind of the ABCD pattern based on engulfing, moving back to the 1995 area, it still will not erase overall bearish tendency in a bearish context. So even butterfly shape will not be broken if market stops right here. Existence of the untouched XOP, it's always brings some risk for downside reversal. Besides, currently, if you'll contract the chart a bit, so you could see that here is some signs of the bearish dynamic pressure is growing. Maybe they are not as evident, but if you could even see it on the daily chart, let's take a look. That we have the bullish trend, but price action not quite bullish. It's mostly sideways. And I suspect that once the major decision will be made, especially on Wednesday, on the Fed, by the Fed, it might be selling on the fact. So currently markets still hold bullish position, long position on the runners. As usual, once the decision will be made, comments will be released from the Fed. Markets could start closing the long position and just selling. So, and I not exclude that we could get a sharp drop later in the week. So this really could happen because overall background, as we discussed, is currently technically due to the activity of the Federal Reserve and the United States Treasury more supportive for the United States dollar, and it will be some pressure on the gold market. That's why on the hourly charts, take a look. That was our first entry. We discussed this was confluence, if you remember. It's for approximately 1950, 1955 area, 1955. So first reaction has happened, so it was more than enough area to move stops to the break-even. But if even you have taken the position right in the OP and agreement with the fib level, let's take a look. Market turns up despite this, even this was significant sell-off. Now it shows nice performance. So here's, if even you have this position, that position, it's possible to place stop to the break-even and see what will happen. It's concerning the bearish signs. What I do not like, guys, it's of course the pace of this action and this sell-off as well. So when the bull's taking control over the market, especially if you have some friendly background, that should be different. That should be somewhere in this case, maybe not as strong as here, but at least it should be thrusty, and it should be well some more pushing from the bulls and pushing price higher. This is well looks bearish, and this suggests that it really might be big chances that suppose this kind of the hand and shoulder shape might fail in the 2 weeks probably, sorry, in 2 days, and particularly speaking maybe right in the day of the Fed meeting. So if you have taken the long position, that's great, but do not forget about managing the position. Keep stops at the break even. Don't forget to tight stops if necessary. For the bears, unfortunately, we do not have currently clear evident signs of failure, but you should stay on guard, and as soon as we will get something, so it might be a good opportunity for taking the short-term bearish position as well.